Good afternoon, everyone, and welcome to Stock Market Today. It's Coram and Ed Carson here with a breakdown of the action in today's session, where we're still seeing the major indexes range bound, Ed.
Yeah, range bound and struggling to even hold major indexes. So definitely something to watch for. I want to take a look at a few stocks that are not actionable yet. Arista Networks, Alteryx, and United Airlines.
And JoJo's really excited about those stocks. You know, Ed, it's really good to be focusing on stocks that aren't actionable at this time because the market isn't looking so great, right? So that's what we want to do. Talk to us about what we saw in the major indexes today with the NASDAQ.
NASDAQ was really range bound, was a pretty boring day for the NASDAQ because, we didn't really rise to the 21-day line and we didn't fall to the 200-day line, but we're right in that area. And so you really can't get too excited about things. The major indexes faded into the close for a second straight day, basically closing at session lows or right about it, that kind of level. So not great action. It wasn't a decisive move on the NASDAQ, though there was some maybe more negative action on the other indexes.
Yes, which we will take a look at. So to put some percentages for the action today, we had the NASDAQ down 0.1%. The Russell 2000 was in the green today, up 0.4%. But the S&P 500 also down like the NASDAQ. It was down 0.3% today. And the Dow off by 0.7%. So we can take a look at the S&P 500. If I can pull that up here, and it's also range bound right around that 50-day line, hitting resistance. It looks like at that round number at 4,000 and just barely hanging above its own 200-day.
Yeah, so I think it slipped back below the 50-day. Barely got it yesterday, when it closed sort of off the highs. So that's not great. And so it's not even really approaching the falling 21-day line, and it's not too far from the 200-day line. So that would be really negative. That would be really a bad sign there. That, and so I think it's just like you have to keep in mind is that when we have some of these strong opens and we're not don't get excited at the first instant. There's a lot of resistance there, and it really doesn't take much. We're almost like right on top of a triangle where you could fall off either way.
Right.
And until we get above the 21-day line, that's just one resistance. Then there's the February highs. It's not like, oh, if we can just sneak above the 21-day, everything is a path to, easy path. But that's just sort of a minimum thing I think that investors should be doing before they really add their exposure. Look for the NASDAQ, the S&P, and the Russell to get above those levels.
Absolutely. So here's a look at the Russell, and I do have a trend line drawn. And even though it looks like maybe it rallied a little bit into the close, my numbers are now updating. It looks like 10 minutes into the close, it was up just 0.3%. So maybe it also faded. It looks like it faded pretty hard into the close there, Ed, actually. So
yeah, the Russell, that doesn't update very well in a lot of places. So, it sort of lags quite a bit, not just here, but elsewhere. But yeah, so
I was looking at CNBC. So
I was too, and it's like, here it is. It's like for the second straight day, third time in 4 days, it hit resistance at the 21-day line. I think today was actually an inside day, so you can't get too excited about it. But again, this is the strongest index, and it can't get above its 21-day line. So,
yeah, so there's that. And now let's also take a look at the 10-year Treasury yield. Here's your TNX, and like we're seeing stocks forming a short-term range, we're also seeing that with the yields.
Yeah, I think that's something to watch out for, is that if this breaks higher, that could really, because clearly that's one big reason why stocks struggled in February was the rising Treasury yield. So, yeah, but we won't get really big Fed critical news until the jobs report next Friday and then the CPI after that. So it could be that we're range bound, or we get little hints and we start moving, but we don't really move decisively. So that's just something for investors to keep in mind.
Right. And it seems like at this time, the IBD team is saying that it's not really a great environment to be making big bets either way. Do you think if we do continue to see this trading range play out, and then we do get a break in either direction, we can make a little bit more of a directional bet that has some conviction behind it?
Yeah, I think so. I think that's what you got to be looking for. Obviously, you can move charge out and then we could reverse lower. So,
right.
But yeah, I think that's what you want to be waiting for. Get out of this range on these things.
All right, we'll have to see. Let's take a look at just two sector ETFs before we move on to some stocks. Here's XME, the metals and mining ETF, with a day of some nice outperformance here, up 1.9% on the day. And in Monday's session, we saw a gain of 2.5%. So in just 2 trading days here, XME up almost 4.5%.
Yeah, this is one of the areas, and there's so many stocks and sectors that look like this. If you could just get a few good days, and this is why it can be so tempting to sneak in, because of course all it would take is 1 or 2 bad days, and this would start looking pretty weak again.
Right.
Yeah, those steel makers, there was some miners, there's some positive action here.
Okay. So one group to watch. What about chip stocks? Here is SMH. It seems like it's holding up relatively well. Not going down. Still some room above the 50-day line. But what should we be thinking about the chip sector right now?
I mean, this is doing reasonably well. If the market does well, you expect it to lead. But even with NVIDIA, even with some other names that are doing really well the last few days, it's not really making progress with the market being sideways, as well.
Absolutely. Okay, well, let's take a look at Arista Networks. This is ANET in the computer networking group, up about 0.5% here today. You know, Ed, we saw a lot of volume coming into this stock on the right side of the base when it cleared an early entry just above the 50-day line. Also on its earnings report, the pullback has been very orderly, and it's now starting to bounce off of the 21-day line. But the only issue is we're not seeing that strong volume coming back into the stock yet.
Yeah, you probably could have drawn a trend line today that it just snuck over. Okay, but there was not any volume, so why get into that? And with the market being stuck where it is, and so, but yeah, I mean, I think the old buy point still works. If you want to treat this as a high handle, well, you'd probably use an early entry sort of like this, or use the 140 area anyway. So that seems like a good place to get into it. Again, thinking about the market, the relative strength line looks like it's about hit. It's not showing up yet, but it looks like it will. Like that looks like a 52-week high.
Yeah, let's see. Maybe it's on the weekly.
So
I guess technically, because it's not seeing this as a handle, it's after the breakout. So
oh yes, of
that's
course,
probably
that's
why
right.
we're not getting the blue dot. Yeah,
that's right.
but it is at a high.
It is at a high, so that's nice. And there's 5 quarters of accelerating growth on earnings, so you can't really. It's hard to beat that. So there's a lot of things to like about it in here. But again, if the market shows strength, this seems like the kind of stock that would go. But that's why it's probably better just to be waiting for that.
Right. And I know this morning on IBD Live, we talked with David Ryan once again about the importance of seeing that strong earnings growth that is accelerating and how that can really fuel huge winners. But Ed, there are some instances where you would think the stock would be a big winner. It has all the makings of a hot growth stock from a fundamental perspective, but the stock isn't really going anywhere. So what do we do with that?
Yeah, that's an issue. Ultimately, you have to. The market is right, or it's bigger than you. That's another thing. It's like, so even if it's wrong, in the short run, it's going to be bigger than you. So, yeah, you can have all these things, and you want to look at it. You're looking for the good fundamentals and everything, but ultimately, have to let the market tell you what is a good stock and what's not.
Right. There's some key ingredients, and fundamentals are just one piece of that. Technicals another piece. The market, some other nuances, but boiling it down, it's good when you have all of those things working together. All right, we'll keep it on our watch list. Let's also take a look at AYX. Looks like it's shaping up 2 weeks in a row of some pretty tight, mild action after exploding up the right side of this base. Taking a closer look here at the daily chart for this database software stock, it does look like it's been trading quietly here, sideways after testing that 70 level after the earnings report. So a compelling turnaround name here.
Yeah, I mean, really explosive growth that's seen for this year, really from almost no earnings last year, but it's returning to profits in 2022. Strong growth the next 2 years, so a lot to like there. Yeah, I mean, it'd be great if it paused for a little while longer, honestly, let the 21-day line catch up, but it sort of has this handle. If it breaks above the buy point of 69.40, 56, that would be there. There is this trend line, that would be an early entry. So, or just the sideways on that in the middle of it. So, just somewhere in there to, again, if the market shows up, this looks like the kind of stock that would do well. It doesn't, not a guarantee, and there could always be bad news. Like they could announce, oh yeah, a customer just dropped us. So anything can happen, but these are the kind of things you want to be looking for, paying attention to, because the market could strengthen the next couple of days.
Absolutely. Let's take a look at UAL. We've seen travel stocks getting back up on their feet, or in the skies, I guess you could say, with a really strong start to the year. Then some sideways action, so a lot of bases being formed in airline stocks. And we really did see the volume get really quiet in this space as the stock found support right around that 21-day line. Maybe not the best reaction to earnings, Ed, but it seems like this was a time that a lot of travel stocks started forming their bases, but this is getting an RS line blue dot now.
Yeah, there's a lot of nice action there. It could be that United was reacting because it followed at least Delta and a few other names. So maybe it's like, well, what have you done for me lately? Because you can see how much it ran up in the couple of weeks before earnings. So there's a little bit of that. So you could have bought it today off this trend line, but there's not much volume. And again, the market's not great. I think you could use 62.34 or 52.34, that area. I think it actually got to 52.33 today. So that tells you that maybe that area is a little something to watch for. And this seems to be doing better than some of the other airlines. I mean, but there's a lot of travel plays that are doing all right. And again, it's just another area where if you could just get a little bit more of a lift, it's, you can get some altitude off of this, but it's just hard to beat those headwinds in this kind of environment.
For sure. A lot of turbulence for these stocks in the last couple of years. So it seems like now there's more of an established bottom and a turnaround going on. So it's looking to get back into that uptrend mode, and it seems like it's getting pretty close, clearing that 50 level. A lot of resistance going back in summer of 2022, late 2021 as well. So it's definitely an area to watch. We'll keep tabs on it. Thanks so much, Ed. And thanks everyone for tuning in. We'll be back with more tomorrow morning on IBD Live. So definitely make sure you join us, investors.com/IBD Live, for all the details on our daily morning live stream. It's a lot of fun. And so we look forward to seeing you there. We'll also see you right back here tomorrow after the close. And a heads up for all our podcast fans out there, we had John Najarian on the podcast this week. Yes, the podcast does usually drop on Thursdays, but it dropped a little early today. The episode came out, and he is an options expert. So our team talked to him about these 0 DTE options, the 0 days till expiration options, and the phenomenon that is going on with that. Seems like it's really catching fire among retail investors, and a pretty overwhelming percentage of options, Ed, expire a week or less now, which is pretty crazy to think about.
Yeah, that's like a lot of real hot money out there. So it's interesting how the market has been sort of range bound, even though it seems like there's so much curiosity within that.
Yeah. So to get more details on what's going on with that and its impact on the market, make sure you check out our podcast, investors.com/podcast, for that. That's it, everyone. We'll see you back here tomorrow. Thanks for watching.